All right, let's transition right into this. Here's my weekly prep for, well, I got the date wrong there. It's the 27th. But anyways, the what we're looking at is that on the S&P, I saw potential interest rate and currencies divergent. So it could be an bank accumulation signaling perhaps a low. I thought there were quality lows put in on Friday. The context is that we're opening gap up and there may be trapped traders below us. The daily and weekly volume imbalance above gives us a clear target that we could be aiming for during the week. And there's a wick formation, so we'll go over some of that. And in the price or in the execution, there's prices opening in premium. There are clean 15-minute lows that I thought might be taken out and be reversed, and then also a 15-minute order block right at the very top where I thought those quality lows are. So the bias for me opening, on Monday I don't trade, or on a first day of the week I'm not going to trade, although I did take one paper trade. So I was mostly observing, but I saw this quality setup, so I decided to take it and put a little bit more effort into the trade map today. And this is part of what I do every day is build workflows, and I help traders understand how they can do that so that you can stay focused on what the trade actually is, rather than getting lost in the soup and thinking, there's just too much information to process and having a clear grasp of your trading plan and your trading execution workflows. So that's what this is. So here's how I arrived at my bias. The three best trades of the day were the 950 turtle soup long, the 1220 propulsion block long, and the 1109 mitigation block short, which is when it happened, but the trade itself is actually 109. So the three daytime features were that price returned to equilibrium, which indicates potential for balance for tomorrow. And then the 4-hour mean threshold was tested. So if we don't get above that, we don't see kind of a big bullish push tomorrow, that is not good for the bullish bias idea. And there was an inside day close, not that was an inside day, because we actually technically crossed over into Friday, but that we closed inside of the range that we created. So that indicates balance. And those are the three expectations for tomorrow. Balance, a test of Friday's low, which would mean that the hypothesis for the long, based on the reasonings before, might be challenged. And then a trend long would be the third idea into 39.19, which is that volume imbalance above us, both on the weekly and the daily. So let's talk about the context workflow. And again, what you're seeing here is a work product from understanding process management. And that's really where I'm trying to help traders. What I'm really great at is process management and helping people see and understand their process. I'm good at seeing my process. And being able to understand that when we break it, that's the key factor in the outcomes that we have. And being able to have long-range sensors on when those processes are going to be broken is part of what my workshop does. So my context workflow is that the daily mean threshold had been tested and bounced. The currency and interest rates showed a conflict, so it could be some accumulation. Prices were opening in premium, so I'm looking for a test down. And if you think about that in terms of like a weak candle, a wick being formed would be a test down. So we'd open higher and then we test down. And that makes sense. If we go higher, then we'd expect to see a wick on the bottom of the week. So that leads me into the next part of the workflow, which is that's a potential wick low for the week. There's a potential breaker scenario on the 4-hour, the 1 hour, and the 15-minute. And that would indicate trap traders. So the daytime frame level that should be tested would be Friday's high of day, and that happened. And then the 4-hour mean threshold low, which happened. What news might generate that? Well, there was not much news, but there was a goods trade imbalance news event. And then as far as the 4 hours, so now we start continuing the workflow and descending in time. What does 4 hours say? Well, it says bullish balance. So you got to be cognizant of the fact that if you do get a good trade off, it might not go anywhere. Might look like trend, stop, turn, trend, stop, turn, and that's the hallmarks of balance. It looks like a trend until it turns on you. What does the 1 hour say? Well, it's bullish, but it's opening in premium, so we don't want to buy that. What does the 15-minute say? Well, I'm seeing a 15-minute mitigation block, so I'm looking for that. And Friday's low did create a quick move away, so I'm really interested in finding out how to find a a long if we do push down into discount territory. So where's that optimal internal to external liquidity run? Well, it appears to be long, but we're not yet in discount. We didn't open on discount, so I was going to have to wait for that. And then the optimal external to internal is short in premium, which happened to pre-market. So I'll call that out. Now I just want to dig into the actual trades themselves and go from there and just show you kind of what I did. I only took the one trade, but let's dig into that. Okay, so as I said before, the first trade was at the 949 roughly. The second one was the 1012, and then the 1109. 109 is what I meant to say, right here. So this trade sets up right here, but then you got to wait for it to pull back and test that short, and then you want to test it into where the support would actually be. So I didn't take this, again, Mondays are not trading days. I just looked at this as a good opportunity to show process management. So as price comes down into this mean threshold on the 4-hour, I'm looking for a turtle soup down here, which means I'm looking for a low to go in, and then I'm looking for that low to be taken out and then run higher. So as soon as that happened, I got in long, and then I was taken out because it didn't run anywhere. But then as soon as we crushed into this low and tested the order block on the 15-minute and saw a strong response away from it, I just waited to see if price would pull back, and it didn't. And if a propulsion block would be created, it was. I got on top of that and then rode that all the way up. I was actually thinking that we would get up here. This was my target for the day, which would have been handsome. But regardless, what ended up happening is price comes up to the top of this gap on the open, in the opening period. If you can see it right here, right there. Comes to the top of that gap, stops, and then goes into bounce basically for the rest of the day, which for the bullish bias I didn't expect, but on a Monday it's totally reasonable to think that. The short is there. I wouldn't take it because of the fact that I'm already bullish biased, so there's no reason to oppose my narrative, but the trade is there on the low time frame, especially when you see a bullish breakout, a failure swing, a channel higher, and then another failure swing. Chances are that's going to turn around. What I was looking for is this area to get tested again and then run higher, but it's afternoon and it's Monday, so I wasn't interested and I didn't take it. But the process is there because I'm seeing we're in discount, we're at support, and then I see the configuration that I'm looking for here. If I were to take this trade here, I would be looking for it to run these highs out. Because it's Monday, it's afternoon, ends up being lethargic. And I would have to say that as I look at this, that's challenging my weekly narrative. So I'm going to have to see something in the overnight to really want to jump on this long. So Tuesday may not even produce a trade, but that is it. If you're interested in a workshop, reach out to me. I'd love to talk to you about how I can help you with your process workflows. Thank you.